Hey guys, today we're going to look at Intel stock, which has recently released its earnings. Intel is, like I said, a chip manufacturer, and its rivals are, for example, AMD and Samsung and others. So as you can see, Intel's all-time high was in 2000s, and now it's at $35 compared to $75, and it's gone down a lot since then, and also since 2021 around that area. But now let's look at the numbers. Market cap of 150 billion isn't that high for such a big company with such a high revenue, but as you can see, their quarterly revenue is declining, which isn't really nice. Their annual revenue went up from 59 billion to 63 billion. Their net income is positive with 8 billion of net income, but it declines 2 billion in the last 5 years. Their shares outstanding went down from 4.8 billion to 4.1 billion, which is nice. Their cash flow from operating activities went down from 21 billion to 15 billion. Their free cash flow went down from 12 billion to minus 9 billion, which is really not good. But you could say it's due to their capital expenditures, which meaning they built a lot of factories right now, which is the reason for their negative free cash flow. Their total debt is at 42 billion and their net debt is at 14 billion, which is around 4 to 5 times their net income, which isn't that high, to be honest. They also pay out a dividend of 5% right now, so if you want to buy a company with a nice dividend, you could go for Intel. But keep in mind that their free cash flow is negative this year, so that could be bad for. That means the dividends paid out is financed by debt, which they have to take on because of their high capital expenditures. So now we'll calculate the value of Intel. For the lowest case, we entered Intel, the stock ticker ENTC, revenue of 63 billion, revenue growth of minus 4%, profit margin of 2%, price to earnings of 8, and earnings per year and profit for the investor per year of 15%, which would give you a buying price of $0.45 per share. But these are really unrealistic expectations. Now let's put in some higher numbers. No, now I have changed the price to earnings to 10, profit margin to 12%, and revenue growth to minus 3%, which would give us a buying price of $3.7. These are still bearish assumptions, but they are realistic and could happen. So this is our neutral assumption, revenue growth of minus 2%, profit margin of 15%, which would give us a buying price of 5%. Now we go bullish. Our bullish assumption would be revenue growth of 0%, profit margin of 25%, and price to earnings of 12%, which would give us a buying price of $12.8. And you could even go really bullish. So if you go really bullish on the stock, in my opinion, it's revenue growth of 2%, profit margin of 30%, and price to earnings of 15, which would give you a buying price of $23 per share. So it depends on how bullish you are on the stock. With this model, you would have a buying price of $10 to $23. Now let's look at our other model. So with our other model, we enter the ticker symbol INTC, growth rate of 7%, growth rate of 3% after that, and discount rate of, so that means our expected return of 15% per year, terminal value of 10, year zero free cash flow of 9.6 billion, stock-based compensation of 3 billion, net cash minus net debt minus 14 billion, so they have net debt of 14 billion, and shares outstanding of 4.1 billion, which would give us a buying price of $14. And if we put in a higher terminal value, we will get a buying price of $17. So in this case again, $15 to $20. So $15 to $17 in this model would be our buying price if you want to invest with the cash flow valuation model. Now let's look at the earnings release. So they reported earnings per share of $0.41 and revenue of 14 billion around that area. 14.16 billion, which would be better than the few quarters before that, but not better than last year's quarter 3 results, where they made 15.3 billion and earnings per share of 0.25 dollars per share. So still not really nice earnings, even though the stock jumped up from there. So at which price is it a buy for me? For me, it's a buy at $10 to $20 in that range. I wouldn't really go higher than that probably, but depending on the model and your assumptions, it could be a buy from $10 to $23 or even a lot higher than that, depending on how you see Intel performing in the sector compared to the competition. So if you like this video, give it a like, and and subscribe if you haven't already. And here's another video you can watch. In this case, it's a better valued stock with positive revenue growth. Where in this case, it's Visa. Click on the link and bye.